That great resignation is no more if the latest JOLTS data is any indication. Workers are increasingly staying put in their roles, and that could be great news for productivity. Thomas Simons, senior U.S. economist at Jeffries, shared this chart with the Yahoo Finance Chartbook team on that very topic, and Thomas joins us now. So, Thomas, great to have you.
Thank you.
So walk us through this chart, Thomas.
Right.
What's the bigger, broader trend it's pointing us to?
So, like you said, Great Resignation was this phenomenon that we saw in the labor market where people felt extremely confident about being able to find a job, in some cases maybe even holding down 2 full-time jobs at once while working from home. And that led to this huge increase in pay for most of them, right? ADP splits out people who switch jobs versus those who stay in their jobs for this pay insight data that they have. And the year-over-year gain for job switchers was roughly double what it was for job stayers when it hit the peak. And what have we seen since like the beginning of 2022 is that you have fewer people quitting and also less gross hiring, right? So that means people are staying in their jobs longer. It probably means that the teams that they work on are becoming more cohesive. They're gaining more skills, they're getting better at those jobs. And most importantly, it's not just people staying there and getting better, but also businesses not having to spend nearly as much money in human resources trying to do headhunting exercises and then have the people leave 3 months after they had just, switched into this new job.
Yeah, guys, if we can pull that chart back up, and then we have also pay bumps for people who switch jobs. Mm-hmm. So first, let's talk about this. This is the chart you were just talking about. So in other words, we've come back down pretty much to pre-pandemic levels in terms of the number of hires and the number of separations. Combine that with another chart from the chart book, which shows pay bumps for job hoppers. That was, of course, a big theme, right, over the past couple of years. If you switch jobs, that you would get a big increase.
Right.
And that has been decreasing. We've seen that trend. So combine those two things. What does that imply? I guess it implies good things for inflation. If you're an individual and you want to make more money, maybe it doesn't imply something as good.
No, it's not the best. And it's obviously, if you didn't switch jobs during this period of time, it kind of feels like maybe you missed the boat a little bit, right? But I think that the dynamic where people who switch jobs are going to get raises, that hasn't gone away, right? And to your point, with the turnover, it has just kind of fallen right back to sort of where it was in 2019, which, was a pretty decent labor market back then, too. The unemployment rate was very low heading into COVID. So I do think that chart, the turnover chart, shows some more momentum to the downside, that it's going to continue to, sort of show that it wasn't so much a lot of people quitting their job because of some sort of big shift, but rather people's job changes were pulled forward, right? Like maybe I wasn't going to stay in this job, or maybe I was going to stay in this job for a little while longer. It's just that when everybody started doing it at once, it started making people get off the sidelines a little bit faster for that. So, it is good for inflation, which that is good for everybody, that inflation goes down, especially lower income folks. But, it does, we're not yet at the point where the labor market is weakening to the point where we're really concerned about very subdued wages overall.
I think you got to get into a place I wanted to go, Thomas, which is your overall look on the labor market. Because, listen, there's signs it's cooling. Some economists don't seem concerned about that. Others, though, I know, are looking at the unemployment rate and the tick up it's made, and that does worry them. Where are you at?
So I think I'm more in the former camp. I'm not particularly worried about the labor market as it stands now. One of the things that gives me confidence is corporate profit margins have still been quite healthy. They've come down a little bit, but they've also gone through recent periods where they've gone down and then gone back up, too.
So, meaning just profitable companies are going to keep hiring?
Or at very worst, they're just not going to be looking for cost cutting that is going to be letting massive amounts of people go, right? There's always sort of a, culling of the herd or, some sort of refresh that goes on, excuse me, with bigger businesses. But there isn't evidence to me just yet that there's this big push that's going to be looking for cost cutting that way.
We've been watching the jobless claims numbers a little more carefully as well. Continuing claims have been creeping up. But I know you flagged sort of a technical thing that we got to keep an eye out for in those claims numbers, which has to do with Hurricane Beryl.
Yes, that's right. So we had the specific issue is that the claims data that we got last week was for the reference week for the BLS Establishment Survey. And it was a week when there was millions of people, or over 1 million people, I should say, in the greater Houston area without power, right? So if those people were, if they have a job where they get paid weekly and their business was closed all week or something like that, then they're not getting paid. There's no response on the payroll as far as the BLS is concerned. The business will have 0 employees. Now, they've actually done studies on this in the past and went through Hurricane Irma, Harvey, these other storms in 2017, 2018, 2019, in order to try to actually model what they should do with COVID when businesses were closed. And they've improved their processes. So it's possible that this ends up kind of being a non-factor, but last week when you look at the preliminary state level data, you did see Texas had about a 12 to 13K increase. And you can say, all right, well, that's roughly 25% of the increase that we saw during Hurricane Harvey. But again, the timing is the issue. There was only about a 10K increase in claims in Florida after Hurricane Irma in 2017. And those state payrolls fell about 150,000 that month. So that actually caused the headline print to be negative.
All right, Thomas, thank you so much for joining us today. Appreciate it.
Thank you.
And those charts.
Appreciate it.